Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're doing a Thursday market commentary and market scam. We've got a lot going on in the markets. We've got a lot of big news that was just breaking, actually, after a marathon session in the U.S. House of Representatives. The big, beautiful bill passed the U.S. House of Reps, so now it goes to the Senate, and all those rich guys argue about what they want to get in and out of the bill. So the bill isn't passed just yet, and you can see the markets are very stagnant, and they're showing signs of fatigue. They're showing signs of, hey, traders don't want to go long. long. Hey, traders don't want to go short. And the reason why is the geopolitical uncertainty and the political uncertainty here in the United States. We've got big news sort of breaking out of Israel, Iran. We've also got what we think is going to be a drawn-out negotiation process in the Senate over the big, beautiful bill. And believe it or not, I'm going to show you how the two are connected. And there's just a lot going on, guys. There's an absolute lot going on. So I want to welcome back. I want to welcome everybody that joined me yesterday on Switch Markets Live. It's sort of the initial, we're really in the beginning, the infancy of Switch Markets Live and building that community there. But I welcome everybody there. We're going to be doing some live streams there. We're going to be doing them here. We're going to be doing them everywhere. So just be sure that you are always sort of paying attention here. If you want to know when we have a scheduled live stream, howtotrade.com, go in the trading room, check out our forward streams or our scheduled streams, and you can be up and running in no time. Other than that, we're going to be all over. We're going to be over here. We're going to be over there. We're going to be doing all sorts of stuff. So any questions are welcome on these streams. Just go ahead and throw it in the live chat. And if I see it, I will be sure to get to you. If not, I'll be sure to write back to you. Definitely if you're in the trading room. Now, we've got a lot of trade ideas sort of cooking. We've got a lot of news going on. We've got recession. We've got some big economic news out today, and we've got flat markets. So let's get right out to price action here. I was sort of looking this over, and this is a really interesting orb. This is a 30-minute orb on the US 30. I got this question a lot over the past several days. So I don't know if the video on YouTube is sort of getting a lot more attention right now, but I'm getting a lot of questions about the orb. So, Shane, your charts say 7:30 a.m. to 8 a.m. Okay. I'm in the mountain time zone. If we're going to trade U.S. equities indices using the opening range breakout strategy, we've got to start at 9:30 a.m. Eastern. And we want to take a look at either that first 30 minutes, 2 15-minute bars, or that first hour, 2 30-minute bars. Now, I'm sort of preferable to 30-minute bars, but if you're a 15-minute trader, that's great. Just remember where your stop losses and profit targets should be. This is a good look at the 30-minute orb right there. Opening bell, ding, ding. Then we got a retracement back down into that zone, and we've been moving sideways. You don't have a trade yet today. Remember, in order to take an orb trade, you have to have what? You have to have a bar close outside of the range, either above or below. We don't have that yet. We've got some wicks. The market's very wicky. We've got a lot of tails there. We don't have a close. We don't have a signal bar. We're not in. The reason why we have that rule is to keep us out of days like this where it's absolute chop city. And the last thing I'm going to say about why we're choppy is it definitely has to do with politics and the U.S. bill. That big, beautiful bill is a huge spending bill. It's a huge tax cut bill. If it does, in fact, pass the Senate, it's going to send the markets much, much higher. But right now, we don't know if it's going to pass. We don't know what it's going to look like when it finally gets to Trump's desk. And the last thing I'm going to say, and you say whatever you want, the people inside of that room that are voting on that bill are going to know the details. They're going to know how it's going to impact the markets, and they're going to know before we know. Remember, senators, House of Representatives, those members can trade. Right now, they don't know if it's going to pass. That's why we're tied up in sort of a gridlock here on Wall Street. That's why we have the orb. The orb rules keep us out of choppy markets like this. Dave, good to see you. Dave, Bobby Bob, always a pleasure. All right, guys, let's go ahead and get to it. But I want to start out with that 30-minute orb on the US 30. You can see this is just an absolute whipsaw mess. Be very, very careful if you're involved or trying to trade an orb today on U.S. equities. To be honest with you, I would stay out of it. Very slow trading day for me. I just took one trade. I sold 61.25s in July WTI crude futures and just scalped 5 points off of it. But it has been very slow. Missed a gold trade earlier today. We just didn't quite get to our levels. But this is one of those days where I'm very tentative. I'm actually halfway tempted just to rack them up and head home and come back tomorrow. Yesterday was great. Today's not that great. Very, very flat. Tough to trade flat markets. It really is. Okay, everybody, let's get on with the program here. Welcome to the Switch Markets community. Now, this is sort of the stream that I ran yesterday. I wanted to welcome everybody. If you aren't already checking out our live streams on Switch Markets, stay tuned here in the trading room, and then also on Switch Markets, the Switch Markets YouTube channel. We're going to be building that out. Those live streams are going to be scheduled ahead of time, so you'll know exactly when we're on. We do some of the things that are similar to what we do on here, but also I want to really stress this as being an interactive experience. If you have a question, ask it. The whole goal here is to make everybody proficient in trading and as good as they could possibly be. So we're sort of transitioning. We're merging the How to Trade and the Switch Markets communities. And I want to welcome everybody that's brand new and those of you that have been around for a long, long time. I see a few familiar faces. That's fantastic. Let me see. Clarios. Let me see. I'm sorry about the names ahead of time. Kai I'm going to call you Kai. Hey, Kai. Hi, Shane. Could you do analysis on gold? Absolutely. I'm going to look at gold here in just a second. We want to go over a few key events, but our gold markets are sort of, I would say, well, it was just a tough no trade today in gold. And I'll go over that in just a second. But gold's been great to me over the past year. If you're not trading gold, I mean, it's really difficult to say what market would be better than gold. Everybody's trading gold, and you probably should be. A lot of volatility, a lot of money to be made. So, yeah, Kai, I'll start out with gold here. Let's just go over a couple of fundamentals here. First, week 21, Monday was quiet. Tuesday was the RBA rate cut. They slashed interest rates. Wednesday was crude oil inventories. We saw crude oil build here in the United States. Today was jobless claims and existing home sales. Those were our key metrics. Now, they have brought a little bit of action to the market because everybody's trading right now, but it's been a mixed bag. I love to attack days like today. I think Thursday is a fantastic day to trade, historically one of my best days to trade, and I'm going to walk away profitable today. You can get you pretty much bet you that, but as far as this being a great trading day, it just flat out isn't. So if you're on the sidelines, no worries. Okay, we'll get back to that trade follow-up here in a second. We'll go ahead and get out to gold. I know that everybody loves to trade gold. What's a party without gold? I, too, trade gold futures. I don't trade spot gold or this contract here, but I will tell you that it's a great contract. The only problem that you have with this not this CFD, but this pair is that the spread is so ginormous. And I mean, it's huge. Right now we're at about 89, 88. I mean, that's just an absolutely huge spread. Very difficult to overcome that over the long haul. However, if you position trade, if you understand the dynamic, the fundamentals, and the technicals that go involved with gold, then you can overcome that spread. It's doable. These are big, big moves we're talking about, guys. We're not talking about a dollar here, a dollar there. I'm showing, I believe my range oscillator for today was in that sort of our projected range. You could call it like an ATR, but I go with an ADR, an average daily range. I believe my average daily range today for gold futures was like 89. That's $89. For gold futures. That's staggering. That's a staggering daily range. I mean, we're talking about making some real money. 89, that's 890 ticks. That's huge. That's absolutely huge. You know, by comparison, crude oil's, I believe my oscillator's like right at 200 ticks. A lot of money in one, a lot of money in the other, but gold's just been on absolute fire. So if you're trading, you're probably trading gold right here. Beautiful call down there, 31.32. We called the bottom of that. Just basic Fibonacci retracements, Kai. Spike low there to a spike high. I absolutely love 3,500. I think 3,500. If you are going to trade gold and you're serious about it, you've got to be watching 3,500. Now, there's an old saying, and I can't remember who did it. I believe it was Paul Tudor Jones, or it was one of the big rich honchos on Wall Street, one of the legends. And what the idea was, hey, listen, big round numbers aren't just support and resistance. That's how I treat them. He goes, they're also magnets. A lot of times price runs to those big round numbers to check them out. There is no question that the trend is up in gold. I would much rather be long than short, and you can see that we've already put in a test at 3,500. So are we going to test it again? I would bet probably a dollar to a dime that we test 3,500 again. And I say, Shane, okay, well, when? Well, that I don't know. I can't really tell you that because I just don't know. The idea that we're going to go lower on gold hasn't happened. I thought we had an opportunity here potentially to get a big washout underneath this level, maybe come down to 2,900. Did not develop at all. We're back in bullish territory, and we're strong. So if I'm trading gold today, and I'm going to take a look at this, and I'm going to say, okay, we're not going to get a shot there. I would love to sell right in front of 3,500. We're just not there yet. And let's go down to a daily chart. So what does this daily chart really show us? It shows us our great strike of downside support and then a rally. What else does it show us? Ranges aren't necessarily huge. They're big, though. I mean, they're significant. Down here is my RSI. I'm sort of looking at RSI. Where's our RSI right now? Right in the center. Right in the absolute dead center. That means that price is flatlining. So if I'm in sort of a gold market that on the daily at least, we're seeing some up pressure this week, but it's not the trends that we've been seeing. Things have sort of calmed down a bit. You could definitely do something like this with a lot of confidence. Go right, work from this spike low right there, right to this spike high, and then your pullback could be right in there, 32.60. That's a beautiful trade. That would be an absolutely beautiful buy. So I would be watching that relatively closely. I've also got a 13-period EMA, which is right there at 32.68, 32.69. I mean, that area right in there is more than likely going to be robust support. I'm looking for reasons to buy. I want to buy gold, but I don't want to buy it right now at 3,300. I want to buy it when it's on sale. And in order for this thing to be on sale, we're going to have to see price come our way a little bit. We've seen some late day moves during power hour over the past few days. It definitely is possible that we get one of our macro levels, but not necessarily probable. So if I was doing it, I would say, well, it's sort of tough trading right now. I'll take you to a 30-minute chart. I would stay completely away from this. This is ugly stuff. This is what we would call sort of a picket fence. That's what I mean. You got a nice move there. Bang, bang, bang. Okay, then there's your pullback. Compression, compression, break. And now we're just sort of grinding north. I don't think that much of anything happens. You can see we're sort of trading in a phone booth between 33.14 and 32.79. My guess is we're just going to settle somewhere right around 3,300 today and come back tomorrow for some more trading. I'm willing to wait. I think that right down in here, I would much rather attack this market somewhere around 32.70, about $29 south of where we're at, maybe $30 south. Maybe target something like that, maybe 32.65. That would be my bid zone down there. I wouldn't just buy it right now to buy it. However, if you like it at 3,300 and you believe we're going to tick higher, then go ahead and shoot your guns. Just be very, very careful with what you do here. This market is flat. This market is flat. And when we're dealing with flat markets, the number one thing that happens is we just get chopped to death. Nice move there. That's over. Really a nice bounce back during the U.S. pre-market. Trend sort of continues, but it's just not anything. It feels like we're way down on the day. Gold's only down about 0.5%. It's not a trend day. It's a rotational day. Be very careful with rotation. Very careful with intraday rotation. It's choppy. It's miserable to trade. And some of my biggest losing days have been on charts that look like that, where the market looks like it has a direction, but it really doesn't. It's moving sideways. 100%. Bobby Bob, how you doing, Bobby? Shane Vernier, what's your view on Bitcoin and how can I trade it now? Well, I mean, let's go ahead and look at Bitcoin, and then we'll get into some of our trade ideas and fundamentals. Bitcoin, very tight. Another 30-minute chart that's just, I mean, that looks like a barcode. I don't know if you guys have ever seen a barcode on, the back of your groceries, or let me see. I got some chapstick right here. Maybe we got a barcode on here I can show you. Nope, I don't. But it's just like a grid. That's what that is. That's a barcode. And that what a barcode is what I call a picket fence. It's just spike high, spike low, spike high, spike low. Their market has no direction. Long-term bullish, no question about it. We broke above 110, which if you realize, if you remember our analytics, this is exactly what we were looking at. This double top back here that formed in December, and then also again in January. I said, hey, listen, once that's gone, we're going to 25. There's no question in my mind we're going to 125. No question at all. It's the next big round number up for debate, and a lot of folks would say, hey, Shane, what about 112.50? What about 115? What about 120? I'd say, yeah, of course, those are all big round numbers. But in my humble opinion, we debated 100,000 since last November. Just absolutely just test, retest, fail. And now we've broken hard. We've broken hard to the top. Those highs are long gone. We're breaking out. We're making new highs. It looks to me, and this is just wild speculation, but that big, beautiful bill, and we're going to talk more about that in just a second, that big, beautiful bill probably has some sort of dialogue in there for crypto. I would be shocked if it doesn't. We don't really know what's in it. It's, I don't know, what is it, 15,000 pages? I guarantee there's some carve-outs in there for crypto. Somebody already knows today. We're up about 1.6%, not much. Not in the world of crypto, not much at all, but we are banging higher. So right now, Bobby, I would be buying pullbacks. I think that at least the way that I do business, spike high right there, spike low to a spike high or an upper extreme, a pullback down there to 108 is fantastic. What I would be looking for here is a bit more extension to the top side, maybe something like that. And I would absolutely love to buy a retracement somewhere right around 110. I think that that's a money in the bank type of a trade. Now, if you don't want to use Fibonacci's, that's great. You don't have to. The other thing you can do is you could just go, okay, what's my approach? And I'd say, well, do we have a short-term entry using our 920? Okay, here's our daily. Our daily 920 EMA, 9 crosses over the 20 you buy. Right there, what do you got? That's a US 30. Hang on a second. You got very rich. Right there was your crossover back in April, and you were looking at buying about 84s, and now you're way up. And it's been just an absolute beautiful, beautiful thing. Okay, that's ancient history. What do we want to do right now? I'd say, okay, we want to get long. Do we have anything that can tell us to get long? Okay, our 4-hour chart got us long back on the 17th of May, which was, about 5 days ago, and that was a beautiful trade, 103 all the way up to 111. Do I want to be that aggressive? Do I want to go to lower time frames right now on Bitcoin? 30-minute chart. There's your bid. There was sort of your pullback. That's exactly why right there your stop loss has to be just beautiful. If you played it really tight right in here, you got stopped out before the big run. You had to be smart Don't be a pork chop. Understand where to put your stop losses is absolutely imperative. But something like this, boy, guys, I think you're going to have to be on the sideline at least until you get a pullback to 110. If you wanted to buy 110s, I wouldn't fault anybody for doing that, like 110.5 or something like that. I wouldn't fault anybody for that. But right now, I mean, it's just all about, can we get a pullback? Here's your 4-hour chart. And the first thing I'm looking at here is the Fibonacci structure. Look at the pullback. Didn't hit 38%. Where did we go? 110, 110.3, and then a bounce. I think you could probably bid 110s and get away with it, but those are trades. Those are very, very tight trades. You're looking just to grab a few $100s on that trade. You're not looking to really take a position. I believe we're going to 125, no questions asked. I just don't know how we get there. I would have to really hold off and wait for a better entry before I dove in with both feet. Let me see. Let's see. We got a YouTube chat, so I hope that helps, Bobby Bob. Let me see. Ashraf Jamal, how can you inform your team how your team group work? Yeah, Ashraf, what you do is you go, if you want to be a part of the trading community, you go over to howtotrade.com, sign up for a free account. You'll get daily trade ideas. You'll have an opportunity to private message me any questions you'd like, and then also view our trading academy, all of our video library and everything. And then as far as what we do here on YouTube, you're free to ask any question you want. I have the live chat going. Some days we get a lot of questions. Some days we don't get many at all, and that's okay. So if you want to ask a question, Ashraf, you go right ahead. I'll do my best to answer it, but we try to look at the markets. We're going to look at some fundamentals now. I'm going to show you some trade follow-ups on some things that I've recommended in the past earlier this week that are in play right now. All right, so I hope that helps. Okay, let's go ahead and get to a trade follow-up, a huge Thursday news cycle. This has been in play for about a week. And one of the things about these live streams is I don't ignore losers. We get into the losers because if you don't study where you're losing, you don't know how to succeed. You don't know how to profit. Now, right now, we've got a pretty darn good stop loss down there, right around 137.40. We're trading 138.65. We have an opportunity maybe to get back on the good foot here. But we entered at about 139.81. You can see prices against us about 120 pips. Profit targets all the way up here. So now this is a position trade based on our 920 crossover on a daily time frame. All right, so about the first week, this has not looked very good. Not looked very good at all. The idea behind this was that we sort of had a feeling the Fed was going to hold interest rates high. And we also had another feeling that crude oil was going to go down. If you add those two things together, the U.S. dollar should rally against the Canadian dollar. But given all the tariff uncertainty and all the trade war uncertainty, we don't necessarily know what's going to happen here with this dollar CAD. We took a technical trade. Right now we're down. Our stop loss is beneath that swing low right there. Profit target's all the way up at 142.50. This trade can develop very quickly and happen very fast. But right now we're definitely on the wrong end of it. So if you wanted to cut bait and just sort of lose, just fold the trade, you could certainly do that. You could wait for it to come back to break even and then just exit, or you could just hold this thing and you may be in it for another month. And if you have a lot of carry fees or something like that, then you probably can't afford to hold this trade for that month. But it was a relatively cheap trade to hold. So I think that as a position goes, it's still very much alive. It's not necessarily the best trade in the world for retail traders like us, but for swing traders or maybe even intermediate term investors, these are the types of trades that they look for. They're looking for a little bit of risk for a lot of payoff, and they really don't care how long they're in the market. They just want to get paid. Something to think about there. Yeah, Ashraf. Yeah, some days I trade live. Actually, I was going to trade live today, but my trade went right before we went on the air. My U.S. oil sell. But yeah, we do a lot of workshops. If you're interested in live trading, look for the workshops, and we schedule those. And I'll do a live workshop probably at least once a week, maybe twice a week. In those, we get in there and sort of skip the analysis and just get right to the trading, something like that. Okay, so you're definitely looking at that. Right there's your 920 EMA crossover. That's going to be our Canadian dollar trade. And then this trade right here, resistance in play for the USD CHF. I just put this one out, and this one has an actual legitimate chance of coming into play here relatively soon. I believe we were looking at about 83.05s is being our entry point. What is our high? Our high right there is about 83 even. So I'm looking to sell the dollar Swissy here, and the reason why is because I really like this trend to the downside. I don't believe that the U.S. dollar is going to be able to hold up against the Swissy. I think that you're going to get a really great trade right here. 83.11, sort of our 38% Fibonacci, which is a big deal to me. Nice big resistance zone. And then also, you've got an EMA right there at 83.13. So 83.11 to 83.13, potentially you could see that being topside resistance. And if that's the case, then you're going to see definitely a retracement from that zone. So I have a sell entry right there at 83.05. So, if you wanted to see a little bit of live demo trading, we could certainly do that, Ashraf, and it would be something like this. We would just go right here, pull up our trading dome. We go to our order platform. We want a limit order right there, and you're going to want what? You want a limit sell at 83.05. 83.05. As far as take profits and stop losses, I believe we were looking at about 40 ticks. So we'd be looking right there at about 40 and 40. And essentially, that's what I like to do with my trades. I like a nice 1-to-1 risk versus reward ratio. All these are demo dollars. I have a huge demo account, so we just trade using demo dollars. We will trade real money. I don't do it often because the regulators sort of frown on me trading real money because it looks like I'm being an investment advisor, which I'm not. I'm not a CT. I'm not a commodity trading advisor. I could get certified probably a couple weeks. You just got to pay a fee and take a test. I've already taken the test. That's not a problem. I just don't really want to be an advisor. So I am not telling you what to do. I'm showing you strategies and I'm giving you my analysis. That trade right there, pretty darn good. I really like that entry. 83.05-ish isn't bad. If you even wanted to be more aggressive and just sell 83s, you probably could get away with it. But for me, I'm going to wait a little bit. I do like this play. I think that if you get this pullback in the Swissy, you've got a fantastic opportunity potentially to go short and really stay with the daily trend. That's what I would say. Let me see. T Marino, the yen has been similar for me this week. Let me see. Great Britain pound and the the Great Britain pound and the Japanese yen and the euro yen turned on me. Yeah, we'll go ahead and pull that up here in just a second, but not too bad. Not too bad of an opportunity there in the U.S. dollar Swiss franc. That's how you would set the trade up. Something to think about there if in fact you're interested. So sort of using, let's go ahead and use this 920 and take a look at the U.S. dollar Japanese yen. Okay, this is fascinating, and I want everybody to sort of listen up on this trade. This is something that we, I don't know, how do you say this, Daddy likes. I like this setup, and I'm going to add another indicator here in just a second. And we're going to get in on the action here probably in the next day or two. Let me see. T Marino, isn't the yen a safe haven? Yeah, the yen is considered a safe haven, but it's an unconventional safe haven, meaning gold, gold, silver, T-bills, things like that, Swiss francs, those are safe havens. But what the Japanese yen is with regards to being a safe haven is it's an unconventional asset, meaning it is completely different than everything else on the board. So I don't necessarily believe that the yen in itself is a safe place to put your money, but what it does offer is it offers diversification opportunities. And if you have an ability to get into a yen, you know that yen is completely different than dollars, it's different than gold, it's different than the Swissy. You know it's just a different animal. So let's say I'm sitting around and I've got $50 million and I've got to break it up. So I'm buying real estate, I'm buying T-bills, I'm buying some gold, I'm buying some stocks. Maybe I buy some yen to hedge my risk against my US dollar exposure. Think about it. If I'm buying stocks and I'm buying commodities, what am I exposed to directly? The USD. What can help me manage that risk? Japanese yen. Always remember this, guys, and this is a tough lesson. We'll get back to that trade idea in a second. This is a tough lesson, but it's very important. You need to think, if you're going to trade and you're going to start to think in terms of safe havens and risk assets, you start to have to think like a rich guy or a rich gal. Now, rich folks, when they put their money in the market, they're looking for wealth preservation. Wealth preservation. I would venture to say everybody in this room is on the wealth creation. We're trying to make money. Now, a lot of folks out there, and believe it or not, I know several of them, they're not interested in posting big gains. They want to keep what they have because they have a lot. The idea is, okay, I need to preserve my wealth and make sure it's for me the rest of my life. Well, how do you do that? You diversify. And, I'm not an investment analyst. I'm not a fund manager. I think that a lot of those guys are really full of it. They sort of spin narratives that try to convince people to invest their money with them, and they never take it out. Just leave it. Well, that's great. But one of the things they talk about is diversification. And the yen gives you incredible diversification, especially when we're talking about limiting your exposure to the United States dollar. Sort of complex. I don't say it's not a safe haven in that put all of your money in yen. Don't do that. I can't tell you what to do, but don't do that. In any case, right here, 4-hour chart, you're seeing this dollar yen break back above this 920. We're working on a crossover. So the way that I would try to put this one over the top, if I was serious about taking this trade, and it doesn't look like a bad trade at all, is we go right down to the relative strength index. Now the RSI, the reason why I use RSI as confirmation is because it is easy. It is absolutely easy. It comes down here as an overlay, and you go right here. We just go right to our settings. You leave everything the same. RSI links 14, sources close, everything's locked and loaded. And what we're looking for down here is we're looking for, are we in overbought or oversold territory? We were very close to being in oversold territory right there. Our low was 30.86. Now remember, you're oversold if you're under 30. You're overbought if you're over 70. That would really put this trade over the top for me. So let's go ahead and back this off to a daily chart and see where we're at in this regard. Now you'll notice on a daily time frame, we're getting a completely opposite signal here. We're getting a sell signal. Interesting. Would you sell it or would you buy it on a daily? That's tough. That's really tough. You had a buy signal right here. Now you've got the crossover. Do you sell it or do you look at your 4-hour chart and say, no, I'm going to go ahead and wait for this to turn into a buy? Personally, I favor the dollar over the yen. I would be looking to go long. But, definitely our daily is telling us to go short. Conflicting indicators. Most of the time, if I see conflicting indicators like that, one's a sell, one's a buy, I'm out. I don't want any part of it. It means that the market doesn't know what to do, and it means my indicators are all fouled up. So you definitely want to be careful with that. Let me see, Murati. I hope the Kiwi goes down more. All right, let's go ahead and take a look at the Kiwi. Daily chart, you're working on a crossover there, so that could potentially be a pretty good sell for you. This is just craziness back here. This is RBNZ getting involved in the beginning of that trade war. Really, really tough trading. I don't know. There's a buy, there's a sell. That's ugly stuff, but you stopped yourself out. Really a rocky road in there until you finally got a bullish break, and now you're sort of looking to get bearish. So if you hope it goes down more, it really is setting up. It really is setting up from my point of view. If I was going to analyze, okay, we're officially short on that Swissy trade, so that's not too bad. But something like this, if I was interested in trading the Kiwi today, what do you have? Really, really tough market dynamic there. I'm not going to lie to you. I think that if it does come off, it might, you definitely could be testing down maybe this value area, maybe this daily double bottom down around 58.50. That's definitely possible. Let's go to our weekly. But don't forget that you're in a bullish type of a situation. Nice big break there, nice 3-candle break. Now we got a 3-week losing streak, and now you got a little bit of compression. So really a tough trade. If you want it to go down more, though, you could definitely be on the right side of it. I think that you've got a lot of support to contend with right in there, though. Don't ignore those. 58.20. I think 58.50 is probably maybe a safe downside target for you. 58.59, something like that. But yeah, if it goes down, if you're short, I hope it goes down too. I'm not involved in the Kiwi as of yet. Okay, we got a couple other just a quick fundamentals to go over, and then we'll cover a couple markets. We'll look at maybe WTI crude, and then we'll go ahead and sign. Or Euro USD was one that I wanted to look at too. Okay, news of the day. Definitely a big time news day. We're going to blow through the news, give you a nice news blitz here. I think that we're going to be in pretty good shape with regards to Friday's trade. I see this being a profitable week and one that we can feel pretty good about. All right, continuing jobless claims are up modestly. I wouldn't even worry about continuing our initial jobless claims. We're not really looking at that right now. We'll look at NFP when it comes out in early June. So I wouldn't worry about that. The big number for today is existing home sales. Now, you'll notice existing home sales came in beneath expectations and also showed a month-over-month shrink. That's not good. That's the downtrend is definitely there for home sales, and that's viewed as being a leading indicator a leading indicator of recession. Remember, real estate puts you into everything. That affects home builders, that affects realtors, that affects developers, that affects pretty much everybody. So as far as a segment of your economy, when you see something like existing home sales and new home sales really take a hit, that means that the higher cost of capital is having a negative impact on your economy. You're seeing contraction instead of expansion. In any case, right here, existing home sales in the U.S. declined 0.5% month over month to a seasonally adjusted rate of 4 million in April 2025, the lowest in 7 months, compared to 4.02 million in March, retained by high mortgage rates, and sales dipped. Okay, so you've got high rates. You've got a Fed that doesn't particularly want to cut rates. And so what does that end up with? It means that you're in a pretty good downtrend. You can see that these home sales were looking sort of back what we saw last September and August coming out of that carry trade meltdown when the markets really went bad. So how does all this affect the U.S. dollar? Well, it really does indirectly affect the U.S. dollar, because when we see home sales contract and go down, that means that the Fed may be inclined to cut interest rates to try to kickstart the economy, especially if they see that we're going into a recession. However, right now, the Fed's not planning to do anything. June meeting, 4.25%, 95% chance of that. We don't expect the rates to get cut there. July, 73% chance that rates stay exactly where they're at. September's about 65-35. That's the first rate cut of the year. That's really hard, guys. That's really, really hard, because that means we're going to go all summer without potentially a rate cut. How about now? We're still pricing in only one rate cut for November, and then how about the end of the year, December 10th? Where should interest rates land at the end of the year? Quarter point lower, a half point lower? So we're still pricing in 2 rate cuts, but if that doesn't happen, you're going to have a real problem with the U.S. dollar. A real problem with the U.S. dollar, because it's showing signs of weakness right now. It's up a little bit today, but right around 100 is definitely in sort of no man's land for the USD index. We're really wondering what's going to happen with interest rates. That's going to be a challenge. So keep an eye on this, and definitely keep an eye on this. The big, beautiful bill passed the House. Already talked about it. Now it goes to the Senate, and all the Senate guys, the rich guys in the Senate, sit around and they try to get things for their districts and appropriations. They want some things in the bill. They want some things out of the bill. We'll see if, in fact, they can get this thing passed by Christmas. I'll be surprised. What is the probability of a recession now falling below 50%? This is big. This is J.P. Morgan. This suggests that the recession is not necessarily a foregone conclusion. And that's funny, because now we're seeing rates that probably aren't going to get cut until September. We've got a huge spending bill that's being passed right now. I have to tell you that we're going into economic no man's land. I think that we're going to see a boom, not a bust, and I think it's going to happen relatively quickly. Okay, Team Marine, I'm going to go ahead. I'm going to check out the Euro USD, and then I'm going to go ahead and check out the Great Britain pound Japanese yen. If there's any other markets you guys want to look at, let me know. Other than that, we'll just go ahead and stick a pin in it and call it a day. All right, Euro USD. This is really just about as clear cut as it gets for me. Really nice big 3-week, 4-week break right there. Spike low to a spike high. Beautiful pullback right to 62%. That was a banger. That was one of those we got last week. That was a banger. Loved it. Nice big bounce. Now, where are we at now? What are you thinking? Love buying 112.50s. No problem with that at all. Think it's great. How can we do it? Can we get some commonality? Can we get converging indicators? Potentially. Spike low, spike high, pullback, 50% on the daily retracement, and you've got 38% retracement on the weekly. Plus, we've got a 13 EMA in there, right around 112.58. I think this 112.50 area, it was probably today's bottom. It wouldn't be a bad idea to buy the thing at market right now and see if we rotate back up north towards the end of the session. But I'm going to wait for a little bit more of a push. Maybe 112.50, maybe 112.45 could be a great entry. But I will say this, that's a robust support zone, and one that I wouldn't ignore. I wouldn't ignore that at all. Let me see. Okay, Team Marina, on the 4-hour charter, should we stay away? Well, let's go ahead and take a look. I don't really know. I haven't looked at the Guppy in a while. It's not really one of the assets that I'm pot committed to it each and every day. Let's go to a 4-hour chart. First thing we're going to go start with the daily. You can see a nice big move, sort of a lot going on here. I want to see if we have a macro level in play. We do. Yep. Okay. Spike low right there, spike high. That's sort of an inverted hammer on the weekly. That's a reversal signal So, I mean, it shouldn't come as any surprise that we've seen sort of a sell-off this week before a bit of a rebound. All right, that's not an accident. Right off of that, I mean, that's like a magic trick. 38% of the power of Fibonacci numbers. The power of Fibonacci numbers. I mean, I believe me, a lot of respect for Fibonacci's. I don't know why they work. I know they're present in so many facets of nature, but that right there, that's undeniable. Spike low, spike high, pullback 195, 190, What's your low? Your low's 190, It's a beautiful thing. Nice big bounce. So what do we do now? Well, I mean, a weekly, we're still in bullish territory. There's no question about it. The question is, do I want to buy right now at 193.45? I don't know. Let's go to a daily and see. Okay, our trade's pretty much already over for today. You can see we went down and hit that and then bounced. Do I want to be long or short? I want to be long. Can I get long with any sort of meaning? The first thing I'd point out is you're in a very stiff value area right around 193.50. You can see that the market become compressed right around that key zone. So let's go to a 4-hour. Okay, this I like. This is a good move. The big challenge is going to be getting something like this to pull back for us off of a swing high, but I would be buying pullbacks. I think that's a legitimate way to trade this. Just remember, you're not really trending. I mean, you're not. This up here is sort of a 4-hour trend. That's a trend. Market flattens out, and then breaks again. You're trending down in here. You're definitely recovering. Just be careful on that. I would limit my risk just because we could easily get bogged down in some chop there. But like if we extend, let's say you extended a little bit and had an opportunity maybe to buy 193.25 or something like that, which you could get just on a test of 194. That could definitely work. Let's try one more set of indicators on this pair. Let's go Great Britain pound, Japanese yen. Daily chart, okay. I believe the crossover is probably right there, if I'm not mistaken. Somewhere in there. Well, it didn't mark it. Should be right in there somewhere. In any case, I digress. What are we looking at right now? Sort of non-committal trading on the daily. Let's go to a 4-hour chart and see what's happening. All right, there you go. So really on the 4-hour, on the US dollar Japanese yen, you've got a crossover brewing, and you've also got a crossover brewing on the Great Britain pound Japanese yen. So if in fact you do get a nice mighty close here, maybe on this 4-hour bar and maybe the next one, going into the Japanese session, going into the Tokyo Open, I mean, I can build a case to say, yeah, stop loss here, and you're looking potentially for your crossover somewhere in here. What is that going to look like? 190, to maybe 193.45. It's a big risk. If you're going to take that trade, you're going to have to be really shooting for the top of market structure up there, which is, it's certainly doable up at 196. It's probably a superior position trade to our dollar CAD just because there's so much volatility in the guppy. So it's not a bad trade. It just hasn't developed just yet. But definitely, I mean, the worm has turned. The worm has turned. I mean, you're seeing the 9 working on crossing over the 20 and then potentially triggering a long entry here on the guppy. Let me see. Hell no buy today. Yeah, I don't know. This is really tough, guys. These are tough markets. Let's go right to our US 30. Okay, I mean, there it is. So there would be your orb. So if you have an orb trade rolling, something like that, that would be your entry. Let's go to our trading panel and see if we can rock one here. Like we're still flat on that other trade. And this would be one where you just would buy market. Buy market right there. That's going to put you in. Your entry point's not perfect, but that's okay. We got here late. Right there. So that's your entry. So where's your stop loss going to be? You got 2 options with your opening range breakout stop loss. You can go beneath that bar right there, close outside of your range, or you can go beneath the range as a total. You can go beneath that spike, or you could do it maybe beneath this. I would personally pad it beneath that daily low just because if you're going to go that far, you might as well go the whole way. But something like that, maybe it works, maybe it doesn't. The market definitely would have to get up for us to get this. I got to say, though, just by looking at this chart, I kind of like it. I kind of like the bounce back. Why? Look at this. This sell-off right here, that chain, that's what we call a thin chain. That means there's not too many orders at each price point. And when the markets get thin, we have a chance to win. I would say if we break above this daily high and maybe this value area right around 42, 42.35 or 42.50, we should easily be able to paint somewhere up in here. If you were looking for a profit target, that's not a bad one. potentially maybe a 1.5 to 1, something like that. If not, you could dial in just a 1 to 1 and go for it. If you're aggressive and you just want to cut this thing off early and do something like this, maybe that's going to be your profit target, somewhere right up in there. You'll notice I'm doing everything visually because that's what a lot of these strategies are. They're visual. But that's that right up in there. I like this. This is an opportunity potentially to fill this chain in and have a chance on a buyback. I would say that this orb trade right here has a much higher probability of succeeding than the one we put out the other day. Be that as it may. Could it reverse and stop us out? Of course. But I definitely think you could probably play up in here somewhere, maybe for a 300 or 400 point close on the Dow and be in a decent shape. Let me see, T Marino, when the DJ is down, isn't the yen usually up also? The correlations are all there. You'd have to go read them and study them, maybe go to ChatGPT. I've never correlated the yen and the Dow. I've never done it. I've always treated the Dow as sort of its own thing. Typically, all the U.S. indices run together. But when we start talking about the yen and the Dow, are they inverted? Some people say they are. Is the Dow and the Nikkei inverted? Nah, it's questionable, guys. A lot of those correlations that are traditional don't hold water anymore. But do some research, see what you think. Indicates a weak dollar in distress. Absolutely. The problem with the dollar and the Dow is that we've seen a major disconnect. Typically, when the dollar goes down, stocks go up. We haven't seen that. We haven't seen that in the last 2 months. So I'm not too interested in sort of the traditional, the traditional correlations. All right, our Swissy trade's in the money, so we'll see. I'm looking for something down there. We'll see if we trade down to about 82.65. This trade's very strong, though. I think we have a fantastic opportunity maybe to make a few bucks. All right, everybody, I'm going to go ahead and sign off for today. I talk fast and I move fast, and I want to get back out to my gold futures charts. I think that we're in for an interesting type of a detail. Let me see, gold futures right now trading 32.94. I'm a buyer down at 32.70, which it's about 240 ticks, but things are starting to happen. We're starting to see things move. And as those stocks move, gold will follow suit a little bit, and maybe we get a bit of a sell-off and just absolutely hammer that low. WTI crude oil is down to about 61, so I probably should have held those 61.25 sells. That's okay. I'm not too worried about that. Commodities have been flat today. Stocks have been whipsaw. So if you're playing something like an orb, an opening range breakout, this trade here, this one's growing on me. I think it wins. I really do, but we'll see. Okay, guys, I'm going to go ahead and sign off. I want to thank you for joining me. And remember, we're starting to merge. We're going Switch Markets community. We're going How to Trade community. What we want is a group of traders that want to show up every day to trade and that are interested in getting better and better and better every day. I'm not really a trade advisor. I'm not going to sit here and tell you exactly what to trade and how to manage your money. That's got to be on you, but I will answer any question you possibly have. Be sure to head on over to How to Trade. Send me a private message. I'll get back to you. If you have any questions during these live streams, go ahead and fire them off to me on the YouTube channel. And if I see them, I'll get to them. And I don't know, somebody's coming. Our orb trade's starting to break positive. It's starting to give me good vibes, good vibrations off of that one. All right, everybody, have a fantastic trading day. I'm back tomorrow with Trading the Trump Weekend News Cycle. We're going to talk Trump. We're going to talk Big Beautiful Bill, and we're going to see if we can get something going into the weekend. It's a little bit earlier because I have some business I have to tend to tomorrow afternoon. But going into Memorial Day weekend, you're not going to want to miss that stream. We'll set the table. We'll get you ready to go for what is going to be probably, if I had to guess, it's going to be a big day on the markets. All right, everybody, have a fantastic trading session. Trade the action well, and we'll talk soon. See you.